All right, hey, this is Josh Stanek with Stanek Insurance, March 14th, Saturday. In this little short video, I want to talk about North American. I want to talk about the Builder Plus IUL. Okay, the abbreviation Builder Plus Index Universal Life. And I'm going to get into how this can complement what you're doing from a retirement planning standpoint. But the construct of this right here, this passed actually the modified endowment thing right here. What it is for a 42-year-old preferred non-tobacco, 100,000. And we put on this accelerated, here's what I want to focus on, accelerated death benefit endorsement, terminal, chronic, critical. It's got the over loan protection benefit, protected death benefit, and systematic premium allocation feature. And this is very complicated. And this is what scares a lot of people off. But if you have a fiduciary, again, if you have a financial advisor, if you have an insurance agent, if you have somebody that knows what the heck's going on, they can structure this the right way. Because this policy was set up not for maximization of death benefit, but for cash value. But there's some features on here that a lot of people don't understand. So let's go through those features and how they could benefit you. Because not to be a fearmonger, not to talk about all the bad things in the market, but today, like I said, is March 14, 2020. It is Saturday. The markets are silent right now. But the last few weeks, the coronavirus has ravaged down 30% in the markets. But how can you benefit from a quality life insurance product that can complement a 401k, that can complement a Roth IRA, complement a traditional IRA, complement a UIT, complement an ETF, complement what you got going on Schwab, Fidelity? How can this complement you from a life insurance standpoint, but also from a cash value, from a legacy standpoint? But I'm going to show you here how this works. So let's go down to the fine print. Nobody wants to look at the fine print. Very few people want to look at the fine print. But this is how it works. A Builder Plus, again, Index Universal Life from North American. How it works. All right. Accelerated death benefit endorsement. Terminal illness. Maximum 90% of death benefit on election date up to $1 million. Then we have the accelerated death benefit endorsement, chronic illness. And again, I'm going to get into the definition, what is defined as a terminal, chronic, and critical illness. Because you got to understand how do insurance companies label this. Because it's great if they can throw out whatever terminology, but if you can't get your money, claim your money, it doesn't do a doggone thing. So we're going to go over that. But the death benefit endorsement of chronic illness, 24% of the death benefit on initial election date up to $480,000. Accelerated death benefit endorsement on critical illness, lesser of 25% of death benefit on each election date, or $50,000. Then we have the over loan protection benefit. One elected guarantees a policy will not lapse due to loans. Protected death benefit. One elected guarantees a policy will not lapse due to loans. Allows clients to specify a death benefit amount to be protected. Okay, so let's get into the definition of what this means. So the accelerated death benefit endorsement. Now, terminal illness, how do they define this? How does North American, the insurance company, by the way, North American is a highly respected, highly rated company, A+ rated company, been around a long, long time. So you got to work with good companies that not B rated, not junk rated, but companies that stand behind their product. But this benefit allows the owner to receive an advance sum from the policy's death benefit if the insured suffers from a terminal illness. The insured qualifies as terminally ill if a physician is certified that the insured's life expectancy is 24 months or less. The minimum terminal illness benefit is 10% of the death benefit on the election date, or $100,000 if smaller. The maximum terminal illness benefit is 90% of the death benefit on the election date, or $1 million if smaller. Now, the accelerated death benefit amount that is received from the terminals is based on the following factors: the benefit discount rate that the company is required to use at the time of the election. A higher discount rate results in a lower payment. The insured life used by the company, the longer the company assumes the insured lives with terminal illness, the lower the payment. Okay, so that's the terminal illness. Let's talk about the chronic illness. This benefit allows the owner to receive an advance sum from the policy's death benefit if the insured suffers from a chronic illness. The insured qualifies as chronically ill if a physician has certified that the insured is expected to be unable to perform for at least 90 days without substantial assistance from another person, at least 2 activities of daily living are requiring substantial supervision by another person to protect oneself from threats to health and safety due to severe cognitive impairment. Now, the ADLs, activities of daily living, include bathing, continence, dressing, eating, toileting, and transferring. The minimum chronic illness benefit is 5% of the death benefit on the initial election date, or $50,000 if smaller. The maximum chronic illness benefit is 24% of the death benefit on the initial election date, or $480,000 if smaller. Now, it's based on the insured's age at election. In general, the younger the insured's age at the time of election, the lower the payment. The benefits discount rate that the company is required to use at the time of election. A higher discount rate results in a lower payment. The insured's life rate is used by the company. The longer the company assumes the insured lives with a chronic illness, the lower the payment. All right? So we knocked out the definition of terminal, chronic, and then let's go over the last one right here, is the critical illness. This benefit allows the owner to receive an advance sum from the policy's death benefit if the insured suffers from a critical illness. The insured qualifies as critically if a physician has certified that the insured has had one of the following specified medical conditions within the last 12 months: cancer, heart attack, kidney failure, major organ transplant, or stroke as defined in the policy. The minimum critical illness benefit is $2,500 at the time of the election. The maximum critical illness benefit at the time of the election is the smaller of 25% of the policy's death benefit at the time of election, or $50,000. The accelerated death benefit amount for the critical illness benefit is determined by using 40% of the accelerated death benefit at the time of election, regardless of age, gender, underwriting class, or severity of illness. This percentage will not change for the life of the policy. Now again, amounts payable as accelerated death benefit could be taxable under some circumstances, but we're going to get into that later. But you can see the life insurance, it has these benefits, and I want to focus on this. The accelerated death benefit endorsements, the terminal illness, the chronic illness, so critical illness. So what does this mean? If you buy life insurance, everybody thinks, okay, I just have to die to take it. Obviously, with the IUL right here, again, it's set up for a lower death benefit with cash value. But if one of 3 of these things happen, a terminal illness, chronic illness, or critical illness happens, you have access to your money. Here's the fine print, here's the legality, here's the legal print where you can claim access to your money. And this is a very strong company. I like this company. I've vetted a lot of different companies. A lot of them are a little wiggly-waggly under legalese, under legal language. The North American stands beside their product. For more information, you can, I tell you what I'll do. I'll put more notes here underneath the profile of this video where you can get in contact with me. But if you want to set up an initial consultation fee with me, feel free to do that. But it all comes down to policy design. I can't stress this enough. Policy design from the insurance agent and how he or she structures that for the individual client, and how that can be added to a portfolio that can complement, not be the sole existence of a portfolio, but can complement the portfolio. Keep it locked, loaded right here. Standing Insurance.